Something just snapped. Hey, everybody, you're watching Bull Boom Bear Bust, back with another dose of economic reality. Just as predicted, the Santa Claus rally, that's what they've been calling it in the media, was a short squeeze, just as I said back, I said in September, October, maybe throughout those months, that we're going to see a big short squeeze going into the end of the year, what some people call a Santa Claus rally. But we see a big sell-off now so far at the beginning of the year here, 2024. So what's behind it and where are we headed? Well, let's go ahead and get into it. We've got a lot of news, a lot of good reporting here to get into for you today. Well, first thing first, the markets and investors in general were over optimistic about the rate cuts because now Jerome Powell and his crew have come out with more strict language or more harsh language about the rate cuts. Right, so let's just give you a couple of snippets here. And if you read the minutes, then you know this already. But here were some of the highlights here. Right now, he's saying interest rates are at or near peak with cuts likely ahead. That's out of the Fed meeting. But also, some kind of contradictory words there from Powell here. At the same time, they also said likely done with rate hikes, but concerned about uncertainty. So that word uncertainty, could that have been enough to spook the markets? Well, I think that's part of it, but I also think that there was a big short squeeze to push out people that were shorting the market, and therefore now we're seeing the big sell-off. All right, so short squeezes are something that happen when a lot of retail investors get in on the short side, and they get pushed out by the big whales, the institutional investors, the hedge funds, etc. That's what I think is going on here. So I think we're going to continue to see weakness here going into 2024. And Powell was right. There's so many uncertainties out there, not just in the markets, but globally. Look what's happening across the globe here with the wars, with the shipping. We're going to talk about that here in just a few minutes here. Here's another fact here to point you in the direction that things are headed here. U.S. bankruptcy surged 18% in 2023 and seen rising and getting worse here in 2024. When I say things are going to get worse, there are people out there that say, no, you're wrong, you're overly bearish, you're doom and gloom. But every time we look at these data points, I'd say 100% of the time, when we look at it from quarter over quarter, maybe not from month to month. From month to month, sometimes you'll see an anomaly where things will reverse the trend, but then they'll start trending back in the direction that we expect here. Pretty much every quarter we look at these things, and especially year over year, things continue to get worse. U.S. bankruptcy surged 18% in 2023 on the back of higher interest rates. Of course, tougher lending standards. We told you the money supply is dropping. Banks are tightening up credit very slowly. You can still borrow money, but it's getting more difficult. But the cutoff in the spigot of money is not as sudden as it was back in 2008. As the financial crisis was rolled out. This has been very, very slow. It's been a very easing of the money spigot, and best way to describe it, in my opinion. Total bankruptcy filings encompassing commercial and personal insolvencies rose to almost 500,000 last year, and that's up from 378,000 in 2022, according to data from bankruptcy data provider Epic, AACER. So there you go. Bankruptcies are on the upswing here, folks. And how much worse is it going to get in 2024? Well, here's what typically happens. Things start off very slowly, getting worse. The numbers increase in the wrong direction or in the right direction, depending on what side of the fence you're on. If you're looking for a market correction, then bankruptcies increasing is the right direction, right? If you're someone that's all in on the markets and overly bullish, then these bankruptcy filings are in the wrong direction because you're on the wrong side of the trade there. So I always say be ready for both cases, but we see what the trend is here. Doesn't mean that they can't come in and pump the markets up again, but it's getting more unlikely, and you have to look at the odds of things. Kind of like at a casino, you're betting, you play the odds, right? No one knows exactly what's going to happen, so if you're ready for anything, in other words, don't bet the house, right? Total bankruptcy filings, and this is Chapter 11, reorganizations for businesses jumped up by 72%. So people out there saying nothing's happening, and I see this from time to time. This bothers me a little bit. Down in comments, this guy has been talking about the same stuff. Nothing ever happens. Folks, you don't think that bankruptcies up 72% is something significant? 72%? What has to happen to make some people realize that something is happening? Or what kind of numbers have to come out to make people realize, yeah, something is happening? It's just maybe not being reported on the media. Of course, the media likes to point rosy. There's a new word. I was about a rosy picture on things for obvious reasons. I mean, they've got their advertisers, they've got companies advertising, running commercials, and they want to have people spend money. Go spend money because everything is going to be fine. There's no reason to not spend money. There's no reason to save money. Now, we wouldn't want to do that because everything's fine. Things are getting better, right? There's an economic recovery. Don't you know? The Dow tumbles nearly 300 points Wednesday. That's today as I'm recording this. You may be watching this on Thursday, so see what happens with the markets tomorrow. Apple. Let's talk about Apple stock here real quick. Apple lost 100 billion with a B, in market value in one day, more than the combined worth of Ford and GM, and lackluster sales of one gadget is to blame. Sales of the iPhone 15 are lackluster. How many new features can they put into these iPhones where people, sometimes a lot of people, but now less people, but sometimes a lot of people go out and buy every new update or every new iPhone? It's pretty interesting. What are they putting in these phones? Please let me know. I've been an Android guy, and I've been perfectly fine with Android. I've seen no reason to switch over to iPhone, but some people love them, and it's almost like cult. I mean, people are so onto their iPhones, but I actually have an old iPhone that I've never actually connected to the network, just that somebody gave me, and I went through it, looked at the camera, looked at the functions, and the different apps that are installed, and I didn't think anything was that great. But hey, maybe I'm wrong. Please let me know down in the comments. But anyways, people are finally cutting back on getting these new phones, and this was lackluster. The iPhone 16 is set to be low due to lack of new features, just what I was talking about. And I actually said that before reading that particular bullet point here. Barclays cut target price for shares as a result, causing market value to dip. Issues in China are affecting iPhone sales and could cause them to fall more. What about the global uncertainty? And we're on the brink here of World War III. Many people are saying that this is the beginning of World War III. We're not just on the brink, but this is how it starts with a few nations. And as hostility grows, other nations get involved. The U.S., we're involved here financially. And now boots on the ground and even casualties. That's something you won't see out a lot of the media reporting on this, is we're already sustained casualties, U.S. casualties. People said, again, that I was wrong, that wouldn't happen. I said we're going to get more involved in this. It's going to escalate. Another thing we've been right about. And guess what? It's going to get worse. We're going to get more involved. And 2024, you're going to see things unfold that you would not believe. I'm thinking 2024 is going to be on the same level as 2020. Wow, it's hard to believe that we're 4 years past the year that the health crisis came out. 4 years past it. But get ready, because I think 2020 was likely just a warm-up, but 2024 is going to be even crazier, in my opinion. Do I know exactly what it's going to be? Well, no, but I've got a list of a few things that I try to mention here from time to time for you to be ready for. But the bottom line is be prepared. Be prepared financially, prepping-wise. Have some cash out of the system, food, water, essential items here. Get ready for something big to pop off or break, so to speak. And if you're prepared and nothing bad happens, then not the end of the world, right? But if something does happen and you're not prepared, anyways, people think that just like in 2020, there's always going to be the rescue checks or the stimulus checks. There's always going to be the availability of just canceling the payments on whatever loans or debt obligations people have. And I think I think 2020 put a lot of people into complacency, just thinking there's always going to be some rescue right around the corner. And maybe they're right, but what if they're not right? What if 2024 is the year where the catastrophe is Nothing like we've ever seen before, right? So not to put any fear out there, I'm just saying, be ready for anything. Let's see what else we got here. Xerox cut 15% of its workforce. Interesting that they waited till just after Christmas. We saw a lot of layoffs going into the holiday shopping season, which we knew was a big red flag. And now we've got this announcement here out of Xerox. 15% of its workforce is being cut as part of a plan to implement a new organizational structure. The company had about 20,500 employees at the end of the 2022 calendar year per SEC filings. This is going to affect more than 3,000 employees, and Xerox said it's going to carry out its cuts this quarter. And remember, this comes at the same time as monthly job openings hit lowest level since March 2021. Again, you think nothing's happening. Just take a look at the news here. Take a look at the data. Why are monthly job openings crashing now to nearly a 3-year low? Well, just as we've been talking about here, and we've been documenting the demise of the U.S. consumer and the amounts of debt and the savings that's being drained from people's checking and savings accounts, people doing emergency withdrawals from their 401k and retirement accounts. Folks, those are all red flags to let you know what's happening. Now, here we are with this jobs number, the lowest since March 2021. Wall Street expected, lower than Wall Street expected, of course, and reflecting a continued cooling in the labor market to end 2023. And my question is, why would Wall Street not expect this? If we could figure it out here on this channel, why do we always see these news reports that say, oh, Wall Street didn't expect this, this was worse than expected, but yet we tell you here, prepare for things to get worse, but yet Wall Street doesn't understand it. It's very interesting, the way that these things are being reported. Buckle up, the inflation battle is entering a new phase. That's according to Financial Times. And what do they mean by that? There is a fair chance that by the time the trees come into leaf in Washington, they're talking about the spring, this decade's inflation crisis will definitely be over. Okay, so they're saying a new phase is recovery. The eye of the storm has already passed, and prices have been rising at rates no higher than central banks' targets in recent months. So again, they're talking about slowing inflation. But let me ask you this. When prices are too high, when things are unaffordable, do you need prices to go up higher, but just slower than before? If things are unaffordable, do you need prices to go up more, even though they're going up more slowly? Or do you need a correction? Do you need prices to come down? Do you need things to become more affordable? It's pretty easy, right? But all these outlets, including right here, Financial Times, are saying, oh, we're out of the woods. The eye of the storm has passed. Nothing to worry about. Well, we've got some shipping disruptions now that are likely re-entering the scene here in 2024. And could it be worse than what we saw in 2020 as far as the shipping disruptions, the slowdowns, parts and goods shortages? And this goes back to a couple different things that we've been saying here. Here's a headline. U.S.-led coalition warns of Houthis of consequences after Red Sea attack. So in other words, the U.S. is getting more involved in these conflicts. And not only that, now we have these shipping disruptions here. And CNBC put it as follows. Red Sea crisis boost shipping costs. We have delays and more inflation worries. To avoid attacks by Iran-backed Houthi militants based in Yemen, carriers have been already diverted more than $200 billion in trade from the Red Sea. So this is the threat that we face when you see global conflicts unfolding, when you see war. Of course, we have the sad part of it where you see casualties. But from an economic front, from an economic standpoint, you could see more supply chain disruptions, increased shipping costs, and adding to the inflation that we already have. Even though they're telling us that inflation is easing, easing doesn't really help someone that's close to being maxed out on their credit cards, does it? Right? Those people need a correction. They need lower cost of living, and this is going to be an inflationary force that we need to look out for. Adding to the strain, about 20% of vessel capacity isn't being used due to a massive drop in manufacturing orders, right? So we have this conflicts combined with the slowdown in consumer spending. And yes, they told you that consumer spending was up just over 3% year over year for holiday shopping. But what they didn't really explain to you is that that's about the rate of the official inflation number. So it's not that people have more money to spend, it's just they're spending more. And in most cases, they're getting less. Right. So all these things, that we talked about today, really no surprise. Is anyone really surprised by this thing, by all this news? Things are going to continue to get worse. So buckle up, strap in, get ready, have your investments in line, have your preparations in line, and we're going to make money here either way. If and when this market comes down, I think, yes, there'll be some big news that comes out that's going to be shocking to probably the world. It's going to bring the markets down. The question is, how long will the markets stay down? Look at 2020. The markets went down, was it 30, close to 40% on average for all the indices? And it shot back up, the fastest recovery we'd ever seen on the back of more money creation and the biggest amount of money creation that we'd ever seen in history, in the history of the world. And this next one could be even bigger, right? Things have to get bigger to keep the Ponzi scheme going, to keep the pyramid economy operational. Everything has to get bigger. The money printing, the bailouts, it all has to increase. That's how a Ponzi scheme works. And when new money stops coming in, that's when the house of cards comes crumbling down. And looks like we're at the tip of the iceberg right now, or the tip of the pyramid, so to speak, here. So what do you think about all this? Please let me know down in comments. The shipping disruptions, the inflation, the Fed. Just go back a few reports here. We started talking about this, last month? The Fed forecasting rate cuts. Why? Why do we need rate cuts? If everything's fine, if we're having an economic recovery, we should be increasing rates and let people get more money on their savings. So think about this. Now is a decent time to put money away. You get 5% if you park your money somewhere, treasuries, CD, even a money market, interest earning account. 5%, not bad. Still pretty low when you look at a longer term history of returns on your savings. But over the past 10, 12 years, that's very good, 5%. But it comes at a time when savings is at a near all-time low, right? How weird is that? So when people have less money, that's when they get a bigger return on their money. And now is the point where they have nearly the least money they've had in about 40 years. And when rates are lower, then people have a lot of money, and it doesn't really pay to park your money in a interest earning account because you might be getting 0.5%, maybe 1% if you look at over the past 10, 12 years. So what does that encourage people to do? It encourages people to go out and spend the money. Why save if you're not getting anything? And they spend it. That adds to the demand, that adds to the inflation, that adds to the economic boom, the false economic boom, the illusion of an economic boom. And you get these boom and bust cycles, right? So how this is going to play out, who knows? But be ready for anything, folks. We're going to wrap it up. Please let me know what you think about all this down in comments. Thank you so much for your support. Got a few quick shout outs to give here for people giving me support here in this channel as I broadcast to you from my unheated garage. And I'm a one-man show. I don't have editors. I don't have people getting the news for me. I'm not an insider like some of these people out there, like the Babe and Dan allegedly and all those people here. So let's see here. Thank you to the following people. Maria Rivero, long-term supporter. Thank you. Thank you so much. I can't say thank you enough to Maria. She's awesome. And let's see what else we've got here. Who do we have? Hacks. OR32. The screen name, of course. Thank you so much. Mike S. Thank you for your shot of support there. Nice one, actually. Rodney B. Shields, thank you for your support. Morpheus, wow, 3565. Thank you for the kind words and the support. Christopher Quinn, nice to see you again. Thank you so much for coming back here. Hadn't seen you in a while. I appreciate that. T.S.A. Braden, thank you very, very much. I really appreciate it. Thank you for keeping us alive here on this platform. And we'll see everybody very soon. Keep stacking. We'll be back with another dose of economic reality. Bye for now. Peace.